All right, welcome back. Now, the escalating Middle East conflict is the single biggest force driving markets right now. This is not a rumor cycle. This is not social media noise. This is kinetic escalation. The conflict has entered its fourth day. U.S. and Israeli forces conducted major combat operations inside Iran. Initial strikes reportedly killed Supreme Leader Ayatollah Ali Khamenei. Iran responded. Missile and drone attacks hit Israel, U.S. regional bases, and Gulf allies, including Qatar, the UAE, and Bahrain. Explosions were reported in Dubai and other Gulf sites. President Trump confirmed U.S. involvement and warned of, quote, force never seen before. This is escalation at the state level, not proxy theater. Now, here's where markets start sweating. The Strait of Hormuz handles roughly 20% of global oil transit. If that corridor closes, oil spikes, energy costs surge, inflation expectations jump, liquidity tightens, and risk assets compress. Brent is already pushing above $82. If Hormuz closes, $100 oil is not extreme. That becomes a liquidity shock. Dow futures down 500 plus. European and Asian markets off 3 to 7%. Cyclicals hit hardest. Bond flows increasing. Classic flight to safety posture. Gold and oil surge. Crypto? Crypto behaves like equities. Bitcoin dipped below $66,000 earlier, now stabilizing between $66,800 and $68,600. Down 1 to 4% intraday in spots. Not collapsing, but not acting like digital gold either. In war escalation scenarios, institutions reduce risk exposure. Leverage decreases. Funding turns negative. Spot demand softens. Bitcoin becomes a beta asset, not a hedge, at least initially. That's what we're seeing right now. Bitcoin dominance rising toward 58.6%. Capital consolidating into BTC. Alts lagging. This is defensive crypto positioning. One interesting data point, Polymarket volume hit a record $478 million in a single day. $220 million of that on politics alone. Some wallets tied to early positioning reportedly profited heavily. War volatility is monetizable, and prediction markets are absorbing massive speculative flow. That tells you something. Liquidity doesn't disappear, it reallocates. Long-standing U.S.-Iran tensions, proxy conflicts, energy leverage, and an aggressive U.S. response posture. The strategic objective? Neutralize perceived threats. The unintended consequence? Global market shock. Now, where does this go next? Short-term escalation. Hormuz closure risk rises. Oil to $100 plus. BTC likely tests $60,000 or below. Broader equities deepen losses. De-escalation. Ceasefire headlines. Oil pulls back. Risk on snap rally. BTC squeezes shorts towards $72,000 to $75,000 quickly. Right now, markets are pricing risk expansion, not resolution. Crypto is not collapsing, but it is behaving like a high beta asset inside a geopolitical storm. Liquidity contracts first. Conviction returns later. And until oil stabilizes, Bitcoin remains correlated.